Yes, a wonderful good evening and a warm welcome to our Goldvorsorge webinar. It's great to have you with us again today. The past few weeks have been intense. The markets have been unsettled. The US Federal Reserve was once again in the spotlight. Government debt continues to rise. And at the same time, we are seeing major movements in gold and silver, as well as in the decisions of many investors. That's exactly what we'll be talking about today under the motto, Countdown to State Bankruptcy, the Great Redistribution of Global Wealth. So what's behind all this? Why do central banks keep buying gold? Why are more and more people losing trust in paper or in paper assets? We will get to the bottom of these questions today and, of course, answer them for you. But I won't be doing this alone. Once again, we are joined by our knowledgeable experts from Goldvorsorge. On the one hand, we have our precious metals and high security storage expert, Christian Tricker.
A very good evening to you.
And our trading expert from Goldvorsorge, Nikola Dragujevic.
Hello out there and a pleasant good evening. Sit back and relax. It's going to be another exciting webinar today.
He'll show us what's currently happening with gold and silver, how our clients are behaving, and which trends we're observing at the moment. My name is Maximilian Speer, and I will be guiding you through the evening today. What exactly can you expect from today's session? We'll start with the interest rate meeting, or rather, there have been a lot of turbulences in recent weeks. Also from the side of the US Federal Reserve and the new Fed Chairman, Kevin Walsh. In addition, we'll talk about the US debt problem and the major shifts in wealth that we're currently observing worldwide. Afterwards, we'll also take a look back into the past. What has happened with gold and silver over the past month? Then we'll analyze for you the most exciting media controversies of the month. We'll also show you current customer trends, international storage trends, and the most extraordinary developments in the silver market. And yes, in addition, you probably already have some knowledge and experience. What should you keep in mind? What should you pay attention to when buying gold? We'll go over them again, maybe for you as well, even if you're already an expert or have gained experience, the 3 most expensive mistakes when buying gold. And very importantly, at the end of the webinar, so stay tuned, we will of course also look into the future. How will the price of gold and silver develop in the coming weeks? And finally, as usual, we have our big Q&A session where you can of course ask your questions about precious metals here in this webinar. But of course, as always, and perhaps also for our new viewers, you can already interactively submit your questions directly to our gold investment experts via our live chat. If you already have questions during the topics or the discussion rounds, simply write your question directly into the live chat. Our gold investment experts will also answer them directly. Yes, there is of course a lot to report about precious metals, especially in the past weeks and months. Above all, the price has fluctuated, not only for gold, but especially for silver. And to always stay up to date here, I can only recommend our YouTube channel to you, especially for current developments and changes and what's currently happening in the precious metals market. Here you see all important information at a glance on our Goldvorsorge YouTube channel. There are always exciting updates here with our experts as well. Of course, you can also comment and ask your questions here. But here you won't miss any updates about the global precious metals market. So subscribe to our channel to make sure you don't miss anything in the future. Yes, many exciting topics await us here today at our big Goldvorsorge webinar. I would also say, let's get right into it. Christian, the entire financial world was hoping for the first interest rate cut from the new Fed chairman, but that didn't happen. They simply agreed to keep things as they are for now. What exactly happened there and what impact does that have on the gold price?
Yes. Good evening once again to everyone. It was a jolt, as I mentioned elsewhere, but a different kind of jolt than what people actually expected. Anyone who watched our last webinar will remember that we talked in detail about the change of power at the top of the central bank, speculated about the new Fed chairman, Kevin Walsh, described and introduced him a bit, and of course discussed the high expectations associated with him. That's why he has a lot of decisions to make. On June 17th, Kevin Walsh made his very first interest rate decision, a central bank chief. And that's a perfect starting point for our discussion this evening. So If we look at this chart, we can immediately see that, as everyone expected, the Fed has left the key interest rate unchanged in the range of 3.5 to 3.75%. And this is now, in fact, the so-called fourth consecutive rate pause. So for the fourth time in a row, nothing has changed. Then you might say, well, nothing happened, nothing is going on. But that's misleading, because many market participants, of course, were hoping that given the political pressure from the president, the Fed would soon lower interest rates. And the president himself, you really have to say, tried to get Walsh into office for exactly that reason. At least that was Trump's wishful thinking. He likes low interest rates and cheaper money. And what does Walsh do in his first meeting? Well, as you might expect, he goes against this wish. Kevin Walsh emphasized that inflation, in other words, rising prices, is still above the Fed's target value, the Federal Reserve, and that the US economy is showing itself to be very strong despite all challenges. He says that too, and that, according to Walsh, the labor market is also quite robust. And therefore, the conclusion is that the Fed currently sees no reason for interest rate cuts. Now it comes down to interpretation, because he also explicitly said that further interest rate hikes, one needs to be careful there. Now, increases over the course of the year are possible if inflation does not subside sufficiently. So you heard correctly, not a cut, but an increase is on the table. And there's one point I want to particularly emphasize, because it will accompany us throughout the entire year. Walsh also announced that in the future, the Fed will no longer make long-term predictions based on data, but will instead make decisions more short-term based on the data at hand. So in other words, he has predicted a driving by sight approach. The Fed will now operate on a by sight basis and will no longer make such long-term decisions intended to be guiding, and so on. So he will not make long-term forecasts. And that means for all of us, the central bank will become more unpredictable. It will react from meeting to meeting, from discussion to discussion. And of course, that's not what the markets want, because markets want security, not uncertainty. So the markets are trembling, and they have reacted as follows. The dollar and US government bonds, of course, have gained. Now, once again, money is flowing to America. The stock markets have taken a bit of a hit. They're offended. And gold is also offended, so to speak. So in other words, higher interest rates mean capital flows into the US, but the stock markets prefer lower interest rates. And that's why the stock markets are down. And gold, why is gold going down? Well, now many will point out and say, yes, gold doesn't pay any interest. That's because gold doesn't yield any interest. That's true. But gold doesn't need to pay interest. But that's another topic. We can have a detailed discussion about that another time. The fact is, gold doesn't need to rely on interest rates. But this still leads to interest-bearing investments like government bonds becoming more attractive to investors in the short term. And that pulls money away from gold in the short term. On top of that, there's the stronger dollar. That makes gold even more expensive for buyers outside the US. It becomes more expensive, and that dampens demand a bit. So that's the short-term part of the story. But, and this is the real message, which I'm getting to now, the real message is, why do most experts, and we as well, still see no reason to panic? Panic is never good, that's obvious. But if you take a closer look, this interest rate decision actually reveals something very important. The Fed admits that it can't get inflation under control. They can't lower interest rates because inflation is too high. At the same time, the US, and by the way, Europe as well, are sitting on a massive mountain of debt. And it's precisely these high interest rates that are making this debt even more expensive now. And that's a huge dilemma. High inflation on one side and a mountain of debt that actually can't handle high interest rates anymore on the other side. And that, of course, is the strongest long-term argument there is for gold. The short-term headwind now comes from this interest rate decision. But the long-term strength of gold is not a contradiction to that. On the contrary, one leads to the other. And with that, we're already right in the middle of the core topic of tonight. Because this burden of debt I'm talking about, and this debt that ties the hands of the Federal Reserve and the Americans, we'll take a closer look at that in the next part.
Yes, the interest rate decision is one thing. Thank you, Christian. But the much bigger question is, why is the Fed under such enormous pressure in the first place? Because behind every interest rate decision lies a problem that grows bigger year after year. Debt is growing faster than the economy. And as we know, we are currently in an economic downward spiral and inflation is rising. And that's exactly why we're now looking at the real challenge behind gold policy. Christian, just how big has this debt bomb become by now?
Yes, it's enormous. So the mountain of debt is enormous. Let's take a look at the state finances of the USA. On the chart, you can see the development of national debt over the past 10 or 11 years. It currently stands at 39 trillion US dollars. In 2015, it was only about 18 trillion. But as you can see, that's not a B, it's a T. I'll explain to you in a moment what that means. But these 18 trillion have doubled, more than doubled in a decade. If you break that down to every single American, from children to the elderly, each would be in debt by about $117,000 just from this national debt alone. About the trillions. Trillions in German, or in German usage, are trillions in English. In English, you don't say billionen, but trillions. So when Americans talk about billions, those are our milliarden. And trillions for us are billionen. I always have to think of Scrooge McDuck, Duckburg, Mickey Mouse. And Scrooge McDuck always had his so-called fantastillions that he owns. But we're probably not that far away from those anymore either. But more interesting than the sheer amount of these billions or trillions is the dynamic behind it. Because the US now pays over $1 trillion, that is 1,000 billion dollars per year just in interest. In 2020, 6 years ago, it was about a third of that amount, around 345 billion. Now they're already paying 3 times as much per year. Interest payments, just imagine that. So this has multiplied, and by now, the annual interest burden is higher than the entire American defense budget. And then there are a few other little things on top of that. For example, the US will have to refinance about 9 trillion, that is 9,000 billion dollars this year. That's almost a quarter of their total debt that they have to restructure. Because back then the bonds were issued at 1 to 2% during the low interest rate phase. And now they have to be renewed at 4 or 5%. So you see, even without understanding all the details, these numbers are enough to make your head spin. A vicious cycle is developing. Cheap expiring debt has to be replaced with more expensive debt. The interest burden rises even further and the deficit explodes. And this is covered again with new debt. This is the so-called debt spiral. There is, at least mathematically, no way out of it anymore. The bond market, the government bond market, in America, this development has long since been noticed. The major US government bond buyers who have traditionally been there were mainly the Indians and the Chinese and the EU. Also, it must be said, they are withdrawing more and more from US government bonds. In other words, America is finding fewer buyers for its debt security. And we can see the consequences of this in the yields on these securities. So the 30-year government bonds are already at a 5% yield, and the 10-year bonds are also close to that now, at the 5% mark. And that simply means that investors are demanding higher and higher premiums in order to even consider buying them. So the market has become very, very skeptical towards American debt securities. In other words, it's becoming increasingly difficult for America to pass its debt on to anyone. Now, one could say, well, America can't really go bankrupt anyway. They'll just print more money again. That's true as well. They can print more money and the world will absorb it. A lot of dollars, about 50%, aren't even in the US, but are circulating worldwide, so the world is absorbing it. So a classic sovereign default is rather unlikely, but it all works differently anyway. The debt burden is reduced over time through inflation. So in reality, it's like a silent expropriation. And that's why the question isn't whether the debt will ever be repaid, but rather when the purchasing power of money eventually is gone, because purchasing power naturally drops dramatically due to inflation. And this gradual process is what the title of our webinar today refers to. That's the countdown, and the countdown is happening right now. Now, many of you might be thinking, yeah, America, why does Trinke always talk about America? We're not even there. That's their problem. What does that have to do with us here in Europe anyway? But that's not how it works, because US government bonds actually form the foundation of the entire global financial system. And the interest rates for all other investments are based on them. And these government bonds are held in large quantities on the balance sheets of German and European banks, insurance companies, and pension funds. So it's all very closely connected, interwoven with Europe. And even if you, dear listener, have never actually held such an American security in your hand or bought one, if you have a life insurance policy, a pension plan somewhere, or are invested in any kind of fund, it's very likely, in fact, almost certain, that such securities are included there as well. And that's why you can say that when the US catches a cold, our institutions in Europe immediately get pneumonia. That's how entangled things are with interest rates in America. Interest rates are now set globally, so to speak. If the yields on American bonds rise, the European ones follow suit. It's all interconnected, and of course, that makes everything more expensive for us as well. Every loan, every mortgage becomes more expensive. We don't even need to start thinking about it. Just consider how this alone affects the real estate sector. That gives you a headache. So we have the same problems with debt. We also have a nice graphic here now. So we're not always just pointing at the Americans. We're just as indebted. Italy has a debt ratio of 137%, and that's higher than the USA. France, 115. That's already being downgraded by the rating agencies. Germany is still well behaved, relatively speaking, at 65%, but has also essentially gifted itself massive debt packages. And Austria at 85%, there's nothing to be proud of there, because the so-called Maastricht criteria, if any of you still remember them, were actually set at 60% back then. That was supposed to be the limit. You weren't supposed to take on more debt than that, but that's long in the past now anyway. And as I already mentioned, this countdown is running, and these debts are being paid off through devaluation of money. This doesn't just apply to the USA, but also to Europe and for you personally. So now we've moved from America to Europe. And now what does this mean for you directly? What does this mean for your assets? There are three asset classes that are most affected. Maybe we can bring up the next graphic again. If there is another one, let's bring it up. Otherwise, I'll just explain it to you like this. So the first class is government bonds themselves. Of course, take Greece, for example. You might remember the Greek euro crisis in 2012. There was what's called a debt haircut, and private investors holding Greek bonds lost over 50%. It was simply cut, literally reduced, worth only half as much. So that's the first point, anyone who owns government bonds. The second are your bank deposits, whether you know it or not. Banks are among the largest holders of government bonds. So as soon as something goes wrong there, everything comes under pressure. And of course, the banks as well. A classic example, you might remember Cyprus. That was in 2013. At that time, all deposits over 100,000 euros were used for the bank bailout. And then there was a wonderful word for it. And today that exists as a law. This procedure is called the so-called bank bail-in procedure. So as the owner of your money, you participate and help save the bank. This has been binding EU law since 2016. We have also discussed this in detail in other webinars in the past. You can also watch parts of this on our YouTube channel. But just to remind you, legally speaking, as a saver, you are a creditor of your bank. And now we come to the third category. The third category is life insurance policies. I hope that perhaps you have already gotten out of them. We are happy to help you with that. LV2 Gold, there are better solutions than a life insurance policy. Believe me, check it out. LV2 Gold. But in the third category, and this concerns you even more, are your pension entitlements. Now we're getting to the heart of the matter. Insurers and pension funds are, by law, they are required to invest a large portion of the funds you invest. These funds invest the money you give them, and they must invest a large part of these funds in government bonds. That completes the cycle. So your pension, your retirement savings are directly tied to the creditworthiness of the state itself. So you are entangled with government bonds, whether you want to be or not. Recently, one of these victims from Greece was with me, well, his father to be precise, and that was quite dramatic. In 2012, he lost more than half of his retirement savings because at that time he had invested in bonds, in Greek government bonds, and he lost them. And he told me about this debt haircut. That was a pretty dramatic story for the Greeks. And since then, of course, they've only been buying gold for their retirement savings. And he told me, well, he really doesn't want to get rich from it. Of course, he wouldn't say no if it happened, but the goal isn't for him to become rich. But he doesn't want to lose his retirement savings again. That's really the point. If you want to sum it up, the whole thing is about how to protect your assets from the coming state bankruptcy. Earlier, I told you about this vicious spiral. Everything is interconnected. I didn't make this up. You can look it up. And the big question you should ask yourself tonight is, how do you protect yourself from this fiasco?
Yes, thank you, Christian. A lot of input, a lot of information, and above all, a lot of background information. Now we'll take a short half-minute break and then we'll be right back.
Explicitly and specifically intended, designed for use in...
It's you. And royal tradition. The fierce lion holding the heraldic shield, an absolute masterpiece of minting art and a real eye-catcher for any collection. Tudor Beasts, the Lion of England. Now available at Goldversorg.
Yes, we just talked about how the current economic situation as well as the political climate is influencing the economy. And of course, as a result, also the precious metals worldwide. The big question for investors, of course, is this, and maybe for you at home as well, how do gold and silver react to these developments? Let's take a quick look back at the past month. So let's move from theory directly into practice, to the market. Nicola, you observe the price developments of gold and silver on a daily basis. How did these precious metals perform over the past month?
Yes, exactly. It was very exciting again last month. At this point, many thanks to you, Christian. And I have to jump in right away on your last point. And when so much capital flows into gold, why doesn't the price rise? In fact, why does it even go down? And that's exactly what we're going to look at now. Let's look back at the past month. Gold is currently at around $4,000. I just checked the chart and the prices earlier. That's about 11% less than at the last webinar. Silver has dropped significantly more, as always. And silver usually makes double the move of gold, both up and down. And that's one of the eternal rules somewhere in the precious metals market. You can also see that in the current gold-silver ratio. So it tells you how much silver you get for 1 ounce of gold. And it has increased significantly. So in plain terms, silver has fallen more sharply than gold. And anyone who was here last time and listened in won't be surprised by that. And we actually predicted this possible correction last time as well. Take a look at the two charts, gold on the left, silver on the right. Each shows the past few months with the position from the last webinar on the left up to today on the right. And that's my principle. Silver follows gold. but it always moves twice as sharply. And if gold goes down, silver usually drops even more. And that's exactly what we're seeing right now. And in detail, for gold, the support at $4,500 was broken at the beginning of June. And the next level down is currently around $3,800. For silver, we're currently at $58. I just checked earlier, it's about $58.50, with the $55 mark as the next level down. But these stronger movements in silver are not bad news for us. Why and for what reason these levels were also announced to the downside, I will explain that to you in detail later. Why has the price actually fallen? And that's a question we're all asking ourselves. There are three important reasons for this. First, the dollar has strengthened, and a stronger dollar makes gold more expensive for all buyers outside the USA because gold is traded in dollars. If the dollar becomes more expensive, gold also becomes more expensive for anyone buying in euros or another currency. And of course, that temporarily dampens demand. And I already explained this in the last webinar. And this is being confirmed again this month. And many people who say the dollar will die out, the dollar will disappear tomorrow. Well, yes, that's how it is. It won't die out that easily because, as you can see now, it's still here and it's getting stronger again. Secondly, interest rates remain high. The central banks are handling this cleverly. They announce rate cuts, but then take their time implementing them. How far they will ultimately go is the big question right now. And that's what we'll find out step by step over the summer until the next webinar. And as Christian already mentioned earlier, there's always talk about interest rate cuts. Often there is also talk about interest rate hikes. And that's exactly what's so interesting about what will happen in the coming months, or rather over the course of the summer. And of course, we are keeping an eye on this, and we'll also be making YouTube videos about it, which we release regularly, and we'll keep you informed there as well. And that's exactly why it's worth staying tuned so that you are always up to date. Christian also mentioned earlier that gold itself does not yield any interest. At first glance, that sounds like a disadvantage, but it isn't. Everything else has to pay interest because it needs to be sold. A bond, a savings account, every paper market. Gold doesn't have to pay anyone anything because gold is the foundation. It is the security behind everything. And that's why in the end, everyone wants to have it. Think about bonds, for example. No one buys a bond without interest. So interest rates have to rise. Otherwise, the state won't get any more money. At some point, no one wants bonds anymore, just like hardly anyone wanted a savings book in the past. And then exactly this money ends up where it is safe, in gold. That means, and that's exactly what will happen again in the coming months. So at the end of the day, it's simply a reallocation of capital from one option, the system products, into the safe haven, namely gold and silver. And thirdly, the most important point comes last, that a lot of capital has recently flowed into the stock market instead of into precious metals. And this has been driven, I would say, by a certain euphoria around tech and AI stocks. At the moment, the stock market is gold's biggest competitor. Just take a look at SpaceX, for example. Billions were recently raised there and distributed to investors. That only works because there is so much money in circulation and because other sectors have been drained dry, online savings accounts, even crypto. And we've seen this before. Remember the Neuer Markt. That was also a sure thing. Everyone was involved. Today, much of it ultimately failed to meet expectations. This exact behavior is now reversing, and such shifts have a short-term impact. Gold as well. For example, SpaceX, there was a lot of euphoria, but now it's deep in the red. Many investors have lost their money, and then, of course, they reallocate, or at least try to reallocate quickly. And then the money flows back into gold, or currently still into other opportunities. But what's important is that these pressures are only temporary. The demand hasn't disappeared. It's just paused for a short while, I would say. And I'm pleased about the gains in the stock market. But this money will sooner or later move into tangible assets. And of course, I will let you know in good time, or Christian will also let you know in good time when that happens. All in all, those are the main reasons. And we will, of course, continue to monitor them over the summer. So it remains exciting. But historically, it was precisely such phases that were often the best entry points. And how this will continue to develop and where exactly it is heading, we will take a look at that at the end in the monthly outlook.
Yes, thank you very much, Nicola. You addressed it correctly just now. We were just talking about the past, how the gold and silver prices will develop in the future and in the coming weeks and months, we will discuss later. We will also learn more about that. Yes, when prices fluctuate, the headlines usually go wild as well. In the media, some see a major crash coming, while others expect new record highs. So let's take a look at which statements and headlines have attracted particular attention this month. Christian, what were the biggest media controversies? For one thing, as we already mentioned at the beginning, the new Fed chairman, Kevin Walsh, had to take a lot of criticism. Now, after his first press conference, the situation has shifted a bit. What exciting things happened there?
Yes, thank you. Exactly. We'll get to the first point in a moment. From now on, we will also continuously report on media controversies here, and it will be quite amusing at the end of the year to look back and see everything that was said. A lot happens when the day is long. I'm sure you've heard that before. Earlier, or rather, I already talked about June 17th. We talked about June 17th. That was when the Fed decided behind closed doors to do nothing. And we saw how the media reacted to it. Well, now the Fed chair is being quoted everywhere for his statement. This is translated into German, that the risks for inflation continue to point upward. In other words, the danger of inflation is very, very high. And now you have to understand, this man is a professional. He isn't someone new who just got placed there from the job market because he applied. He's a professional who has been in this entire field for decades. He knows exactly what the markets are doing. People hang on his every word. Every single word he says is weighed on a scale, so to speak. And his message, as just mentioned, is that the fear of inflation among central bankers is many times greater than the concern about a slowing economy. That's the statement. That doesn't mean it's true, but that's his statement. And so if this guy is serious and really wants to stamp out the fire of inflation, then at the next meeting, he has to turn the interest rate screw and raise rates further. Of course, many people are already afraid of that. And why does he have to adjust the interest rates? Because inflation in the USA, currently, official inflation stubbornly remains above the 4% mark. So, as I said, the official rate, the real one, is usually much higher anyway. And if this guy actually takes these steps and possibly raises interest rates, then of course we have to expect further setbacks for gold. Nicola will explain to you in more detail during the outlook where things are actually headed. All I can say for now is that, of course, an increase in interest rates immediately triggers something at the major banks. First of all, it's all computer controlled, I would say. All the funds, all these investments, of course, immediately switch to selling gold and buying other products when interest rates rise, where there is interest and the rates are higher. That's the automatic mechanism of the market. That's nothing new either. However, higher interest rates are very dangerous for a weakened financial system, which it is, after all, weakened. We've already reported a lot about this. So these higher interest rates are very risky for the weakened financial system, because at some point, probably not tomorrow and not the day after tomorrow either, but eventually the time will come when the system could collapse under the burden of loans that have become too expensive. Whether it's the commercial real estate market or a number of regional banks that can't take it anymore. After all, it's a shaky house of cards, and forever this pressure might not hold, especially with rising interest rates, mind you. What does this mean for us now? A crash in the markets is not a death blow for gold. In fact, it's simply an accelerant for the entire development and the period that follows. So, while paper gold loses value on the exchanges, the demand for real physical gold increases. And that could lead to a decoupling between the gold price, the paper gold price, and the price of physical gold. So you see, you could almost call this the statement of the month from Kevin Walsh. This could potentially have many, many consequences. Naturally, everyone is now wondering what will happen next. So clever investors don't see this as the end of a gold rally, but rather as an opportunity to add physical gold to their portfolios at bargain prices before the prices go up again. But since we're talking about headlines, here's the first headline. It's from Kevin Walsh, where he describes the danger of inflation in a very, very dramatic way. And this back and forth is perfectly reflected in the headlines as well. Some say one thing, others say another. There's a major financial portal, investing.com. At the beginning of June, they wrote in bold letters, a major crash threatens gold. And then there's the other side. Just a few days later, the next one comes along, the Commerzbank, the next headline, and the Commerzbank already sees the gold price above $5,000 again. So one is shouting crash, the other is predicting over $5,000. If you just look at the headlines, it makes your head spin. So you really can't make sense of it anymore. One headline is all about crash fears, and those are the short-term setbacks that you could take advantage of. And then the other headline, at least the Commerzbank, it's probably more realistic because the bank actually wants to promote its own products and not gold or the gold price, but rather their paper products. If even they are now seeing gold going back up, then that's actually a more genuine signal. But these are just forecasts. That's why at the end of the year, we look back and maybe we'll laugh at how many predictions turned out to be wrong. If you, dear viewers, want to gamble and speculate and have sleepless nights, then check these numbers every day. But if you want to sleep well, then don't have this speculation story on your mind. Instead, just buy simply gold for your wealth protection. That way you secure your savings, can sleep peacefully, and don't need to check the numbers every day. And you'll have a stress-free life. So don't let yourself get unsettled. Buy gold regularly and don't look too much at the prices. It will recover again. You will have an average price and you don't have to wait for the perfect moment because the perfect moment only ever exists in hindsight anyway. In hindsight, you're always wiser. And that's why these are just media sayings. You always have to take all of that with a grain of salt. I'm already curious to see what great sayings we'll get after the summer, which we'll then dissect. With that, back to you, Max.
Yes, thank you very much, Christian. Perhaps another note for you, dear viewers, as has already been mentioned several times, we, of course, always have the latest topics and developments regarding the gold price, silver price, and global influences on our YouTube channel, where we also have our weekly format, Goldvorsorge Erklärt, where you can always catch the latest news every Friday from 9 a.m. And of course, our expert videos on a wide range of topics, such as high security storage, but also, of course, how to buy properly, precious metals, for example. So follow us on our Goldvorsorge YouTube channel. Here you won't miss anything and you'll always be fully informed about everything related to precious metals. Yes, what's also interesting now is the question of how people actually react. Not the media, not the analysts, but the investors themselves, like you at home perhaps. And that's exactly what we see every day in our advisory branches. Nicola, what is the current customer trend showing, or rather, what is happening with our customers on site and in the branches?
Yes, and that's really exciting. After all the big numbers from Washington, I'll now show you figures from the real everyday trading. Today, we've talked about falling prices, about the correction, about the headwinds from the Fed, and the obvious assumption would be that when prices fall, people usually sell out of panic over losses. But let's take a look at what really happens in reality with us. And that's the crucial point that no one else shows you like this, because we see in real time what people are actually doing. And I analyze customer behavior every day. And especially during this correction phase, the buying side is unusually strong. And from my point of view, the reason for this is clear. Private investors have developed a much greater awareness of precious metals in recent years.
Also, thanks to our videos and webinars, I would say. And that's exactly what you can see in the numbers now. while the price was falling, our customers were buying. In June, we had 70% buyers versus 30% sellers. That means for every seller, we currently have about 3 buyers. And the people who trade with us daily buy more when the price drops. They don't sell during the correction phase. They actually take advantage of it. And that's the core of this webinar, or rather not just this webinar, but every webinar. What we tell you doesn't come from the internet. It comes from our daily trading. And every month we show you what actually goes across our desk. And from that, of course, you can see which direction the market is heading. And now the crucial point, the seller side has remained practically unchanged. That is exactly the opposite of what you would actually expect with falling prices. That means I would say there is really no sign of a summer slump. So what do we take away from the real customer trend, or rather from customer behavior? It's quite simple. People are doing exactly the right thing right now. And what we actually want to encourage you to do throughout this entire evening is not to let this correction unsettle you, but to really take advantage of it. And as for how things will develop with silver, which is attracting so many new buyers, I'll get to that later, because with silver, the effect has become even stronger. That means the interest here has increased significantly. And that's exactly what's interesting, which we analyze every month. So customer behavior, it's truly fascinating at the moment. That means the stronger side are the buyers. And of course, that makes me happy to see. Even now in the current phase, I want to appeal to everyone out there again. Be buyers as well and keep adding to your positions. These are really times you should take advantage of.
Thank you very much, Nicola. Of course, another exciting question is, if you actually own gold, silver, or other precious metals, where do you store them? And that's where you come into play again, dear viewers. We would like to know from you, if you already own precious metals or are already an owner, where do you currently store them, the majority of your precious metals, or would you prefer to store them somewhere specific? We have an interactive survey for you. Take part and answer this question for us. Do you store them at home in a bank safe deposit box, in a professional high security vault like here at Gold Warsh, or I don't own any precious metals yet, and of course, we hope that will change for you after today's webinar. So take part in our interactive survey. We would be delighted, and at a later point, we will also evaluate all the results. We'll discuss it briefly again. Not only is buying behavior changing, but as we just mentioned, the question of where precious metals are stored and where they should be stored is becoming increasingly important for many investors, perhaps for you at home as well. We at Gold Warsh, of course, have our high security vaults. We are pioneers, not only in German-speaking countries, but also internationally, worldwide. That's why we are now taking a look at international storage trends. Christian, what developments are we currently observing here, and what exactly are the trends?
Yes, thank you very much. Let's take a closer look at that now. This also fits very well as a complement to the information that Nicola just presented to you, because these insights from Nicola, of course, and also the ones I'm about to share, come from the real world, from our daily work and our interactions with our customers. And I've put this together for all of you again, so you can see what the global trend is when it comes to high security storage, what is stored where, what is moving, and where it is going. And then you can decide for yourselves. You can also decide how to take advantage of this. And if you can't make a decision, please write to me. I'm more than happy to advise you further on this. Of course, myself and my team as well. And of course, my hardworking colleagues as well. So let's take a look at where our customers' precious metals are stored. And then we can identify a trend from the whole situation. And unlike many others on the internet who try to profit by stirring up panic among people, we don't do that. There are already plenty of others who do that anyway. We look at the real information from our customers, and we already have the chart here showing where our customers are currently storing their assets, in which regions of the world. And I should add, of course, that there are many customers who do the same. Some have one car, a second car, and maybe the kids have one too. Naturally, there is also a trend toward a third storage location among our customers. There are customers who have a second one, and then there is also a third and maybe even a fourth. So it's not the case that there has to be just one storage location per customer. People like to diversify a bit to spread the risk. That's exactly why we're here, because we offer this international aspect. So let's take a look at it now. We'll start with Europe. So around 40%.
All our customers continue to store within the EU. So not all of Europe, but I'm talking specifically about the European Union. And of course, leading the way is Vienna, but Hungary is also quite strong and still going strong. Frankfurt, these 40%. And compared to last year, this total hasn't changed much. However, there have been shifts within, of course. Clearly, there was a trend away from Frankfurt because since April of this year, there have been no new tax-free silver purchases for private customers in Frankfurt. I'm sure you've all already heard about this. But what is already stored there will, of course, remain tax-free. So it hasn't just vanished into thin air. Of course, you're also welcome to switch to us if you've been storing with another company there. That's possible too. Just write to us about it. But now back to this Europe situation. There continues to be a strong trend within the EU toward Budapest. Hungary is especially popular among Germans, as you all know. And in Budapest, we have a great branch, and you will also receive German language support there. The branch is becoming more and more popular. In general, it must be said, we recently had someone here from the Budapest branch as well, and they told us a few stories about how things work over there. But the fundamental question is, why Europe? Why the EU? Why do many customers prefer to store their assets close to home in Austria, Hungary, and Germany? Well, of course, many customers appreciate the geographical proximity. They want to have a local contact person, they want personal advice, and they also want the option to quickly deposit and withdraw their assets. And our customers also know that we offer worldwide flexibility and that you can also change the storage location without much effort. But if I look at this chart again, maybe we can bring it back up. Things get interesting when it comes to international high security vaults outside the EU. There we see a clear trend, which is heading towards Switzerland and Singapore. Switzerland 22%, Singapore 20%, almost neck and neck. Let's take a look at Switzerland first. Switzerland has gained ground. Currently, about a quarter of all new storage openings are in Switzerland. Why? Switzerland is popular because it's outside the EU, but still in the heart of Europe. I think everyone knows that. You can get there in a few hours by car or by other means of transportation. And at this point, warm greetings to my colleagues in Switzerland, especially to Ms. Bubic. Many of you already know her. Best regards from Vienna. Ms. Bubic will also be happy to assist you personally at our branch in Zurich. And you can also write to me. I'll be happy to forward it to Ms. Bubic. You already know my colleague, Mr. Del Brete, as well. He also told us quite a bit about Switzerland in one of the recent webinars about the trends that are happening there. And Switzerland is definitely top. Let's continue. As I mentioned earlier, there is also a clear trend towards Asia. Currently, every fifth high security storage facility for gold investments is being set up in Singapore. And compared to the previous year, the growth there has almost doubled. That's quite something, you have to say. And of course, it has a bit to do with political developments worldwide. But you also have to say Dubai, also one of our flagship locations, Dubai in the United Arab Emirates, has recovered quite well again. In the spring, there was some skepticism due to the conflicts between the USA and Iran. But these concerns have now eased considerably, it must be said. My colleagues from Dubai are actually telling me very good news. And Dubai as a storage location is picking up speed again. Right now I have it at 15% here. If you look at it on a monthly basis, there were months over the past year when it was already at 20 or 25%, but it will settle and recover at this level again. But you also have to say that while some locations are picking up again, others are losing quite a bit of significance. What do I mean? Of course, I mean the USA and Canada. Currently, we are receiving, at the moment, we are only getting very few inquiries there, which of course has to do with the political developments that are hard to predict right now. So it's unclear how things will proceed. Then it occurs to me, something many customers keep mentioning or that comes up as a topic is Hong Kong. We don't have a high security storage facility in Hong Kong, but I'm bringing it up anyway because lately it's been circulating more and more in the media and is increasingly being picked up by customers as well. At first, people are curious. It sounds exciting, thrilling. But in the end, there is hardly any real demand because the fact is, Hong Kong simply belongs to China and it is officially a part of China. And in the end, the fear of trade conflicts that might arise is greater, or the fear of sanctions between China and the West outweighs the interest. Many people are even afraid that there could one day be confiscations if you have stored your assets in Hong Kong, and if there is some kind of war or conflict. And that's why the good alternative to Hong Kong is always Singapore. After all, everyone in Singapore is Chinese too. They just don't call themselves Chinese, but Singaporeans, something like that. But in reality, everything is Chinese anyway. And today, Singapore offers almost all the advantages of Hong Kong, but without the disadvantages. Singapore has strong property rights, is neutral, has a stable legal system, and of course, our clients love that too. So if we summarize the development, many investors are moving away from traditional storage locations and prefer to leave the EU for Switzerland. Many, of course. Singapore and Dubai is also becoming more popular again. And at this point, I would like to expressly thank all those who have made inquiries, new customers, and webinar participants for their support and loyalty, and for joining us again today. Because I have to say, last year was absolutely crazy for us. We almost couldn't keep up with setting up the storage facilities. It was just insane. And we had to increase our staff as well. We have several new employees who help with setting up the storage. And now we've already reached the level of the entire previous year. You really have to let that sink in. So I would like to take this opportunity on behalf of the gold suppliers to sincerely thank everyone for their loyalty. And all of this shows just how strong the interest in precious metals and secure high security storage is. One hot topic comes to mind, the issue that keeps coming up. But at the beginning of this year, it was especially prominent because the safe deposit box story was once again making the rounds in the media. There were several break-ins, and that prompted many people to start reallocating again. You're probably familiar with these stories. You can read a lot about them in the media. Safe deposit boxes are made for securities, but not for precious metals. But I think I've already told you that many times. If you need more information about this, just let me know. And with a high security storage facility, you simply have the greatest flexibility. If something no longer suits you, just get on a plane and fly away. And you can access your storage from anywhere in the world. I don't think I need to advertise any further. Otherwise, just write to me and we'll arrange a personal consultation. Thank you very much.
Yes, thank you, Christian. Yes, the topic of high security storage is, of course, a top priority here at our Gold Warsaw, as has already been mentioned several times. If you have any questions about this, you are, of course, welcome to ask them today during the webinar or on YouTube, or you can also visit our branches in any federal state directly. Just a few minutes ago, we also started a survey for you. We wanted to know from you, where do you currently store the majority of your precious metals, or would you prefer a certain storage location, or do you even already own gold or silver or other precious metals? That's what we asked you about. There were also numerous participants who voted diligently. And here we also have the results. 30% store their gold and silver at home. Bank safety deposit boxes, as Christian just mentioned, are not very recommendable. Only about 4% use them. Perhaps we were able to encourage a bit of a change in thinking here as well. Then there are professional high security storage facilities, which we, of course, can only highly recommend. And if you want to know more about this, feel free to stop by and see us. 52% of our viewers are already doing everything right, so feel free to get advice from Goldversorg, and many, 13% in this case, do not yet own any precious metals. Nevertheless, we are pleased that you are joining us today so that you can get detailed information and hopefully become our customer as well. Yes, we have already talked a lot today about how many things are changing, especially right now in the gold and also in the silver sector. One report in particular stands out at the moment. Above all, the price of silver is currently fluctuating massively. While many are still focused on gold, there are also many critical voices regarding the silver market. At the moment, there are rather unusual developments here as well. Nicola, what is currently happening with the manufacturers, perhaps in the silver sector, but also in the gold sector? What are the current trends here?
Yes, so we are currently, or rather, I am in contact with the manufacturers every day, and there are some very interesting conversations. That means you out there are also getting information straight from the source, from the best source, you could almost say. And lately, the main topic of conversation has been silver. And we've been observing this a bit. We've also looked at the numbers on our end. And in fact, silver is currently attracting many new buyers. Now, I'll show you why exactly the stronger movement in silver presents an opportunity. When it comes to silver, we have a perspective that hardly anyone else has, because for many years, we've been working directly with the world's largest mints through long-term contracts. And these very mints are the early indicators of the precious metals market. This means it's a win-win situation that we have these weekly conversations with them. We regularly summarize these weekly conversations and also share them in YouTube videos so that you are always up to date. And these very international mints, of course, are the first to notice when demand picks up, often weeks before anyone else. The picture they are painting right now is unmistakable. Take a look at this chart here. The Royal Mint, the Royal British Mint, reported 10 times the silver sales in the first quarter compared to the previous year. Not just 10% more. Attention, that's 10 times as much. And for every ounce that a customer returned, there were 2 new buyers. And this is a quarterly snapshot, not a daily price, but it shows the trend and it almost exactly matches our own customer trend from earlier, which I already showed. And now you might think that with this level of demand, silver will eventually run out, but that's not the point at all, as the mints are also reporting. The metal is definitely available, the mines are producing, the refineries are running, which means that due to the high demand, the refineries have now basically introduced shift work. And where there are occasional bottlenecks is in the processing. So backlogs at the refineries, delivery times for individual products, the products themselves, not the metal itself. So there can always be occasional delays, but at the end of the day, all mints remain able to deliver. We have long-term contracts with them, which means that the quantities we have fixed and planned months in advance are delivered to us as usual. That means you can come by and see us at any time. We have everything in stock, which you can also check in our online shop if you like. And some manufacturers, therefore, only deliver certain products on allocation. In wholesale, we call this allocation. And especially when we chat with the manufacturers, they always tell us that we are always at the very front when it comes to allocations. So from this, you can also clearly see the long-term professional relationships we have with them, which have become like a genuine friendship, a situation where you not only exchange information about the entire volume, but on the other hand, also learn new things about the precious metals market here. Also, many important pieces of information, which we always summarize in each webinar and share with you, so that you can see what is really happening behind the scenes. That means not just at the sales counter in front, but also in the background, how everything works and what the mints are reporting here as well. And what does that mean for you specifically? Through our long-term contracts with the manufacturers, we have secured fixed quotas. In plain terms, this means that we have sufficient silver available, except for certain individual sizes, of course, but overall we have plenty of silver in stock. My particular recommendation is to use the duty-free warehouse. Christian is our expert in this area, so please contact Christian for duty-free storage of your silver. This means that you will hardly notice these shortages in the broader market with us, and you will hardly feel them even when we enter the next super cycle. By the way, regarding the super cycle, we also have videos and a webinar on this topic. Feel free to check them out to see what we mean by that. Of course, we are prepared for every phase, especially in the long term. We have taken precautions, so just drop by, contact us, and above all, take advantage of these prices now.
Thank you very much, Nicola. If you are now considering getting started and want to invest in precious metals, whether gold, silver, or a mix, you should take advantage of this opportunity, but be especially careful because there are many mistakes you can make when buying precious metals. Just as important are certain basics that you always need to keep in mind, because at Goldversorg, we are always happy to give you advice and tips. You are also welcome to visit our branches for a detailed consultation. But of course, we have also prepared something for you. On our YouTube channel, we always feature our top videos. Attention, you should avoid these 3 mistakes. That's why we've also prepared the most important basics for you here before you decide on gold or silver. So listen up, there's really something to learn here, and I'm looking forward to talking with you further afterwards. Christian, what is the biggest mistake people can make when buying gold?
The biggest mistake you can possibly make is not doing it at all. Many people say, now I'm going to start buying gold, or I'm finally going to begin. But they talk and never do anything. That's why the most important thing is to actually do it, because at the end of the day, gold preserves value. It is certainly one of the best ways to protect your wealth. While inflation slowly eats away at everything else, your wealth remains intact with gold.
When you actually decide to buy gold, which products should you look at, or what mistakes can happen here if you're just starting out and have decided to invest in precious metals?
So the most important thing is to buy investment gold. These can be coins or bars, and you should stick to the mainstream, meaning the most well-known brands. For coins, whether it's a Philharmonic, a Krugerrand, Maple Leaf, or American Eagle, for example, and for bars, there are also differences. Münze Österreich, Argor Heraeus, Valcambi, and so on. Bars are somewhat more regional, coins are a bit more international, but stick to investment gold and don't go for jewelry. With jewelry, you pay 20% or 19% value-added tax. That's money lost. And a third tip, maybe also stay away from nicely packaged, fancily presented collector's items. The nicer it's packaged and the more impressively it's presented, the less it's often worth and the lower the gold or silver content tends to be.
You just brought up an important point. What would you recommend, especially regarding where one should buy? There are now, of course, very large precious metal dealers, but also private sellers on the internet. What are the most common mistakes here?
The most common mistakes are that people look for cheap gold and blindly trust someone on the internet. If you buy precious metals, if you buy gold and silver, buy them from an expert, a professional, a specialized store. There is no such thing as cheap gold. There is always a gold price that is the same and transparent for everyone. An expert always checks everything for authenticity. I could tell you many stories from the internet. People get scammed and ripped off in all sorts of ways.
Then, of course, another important question is, what do I buy? You already mentioned it briefly. There are coins, there are smaller and larger bars. What mistakes often happen here, or what is your recommendation here? How should one divide it up? We know there are different sizes of bars and coins. What is your professional expertise here, your recommendation?
My recommendation is to have the right small denominations, meaning the right divisibility so that you have the greatest flexibility. And what does that mean? You shouldn't just calculate what it costs per gram because then you would only buy kilo bars. But you won't be able to slice up that large kilo bar. Instead, you'll be glad to have small 10th ounce, quarter ounce, half ounce coins, or even smaller bars, 5 grams, 10 grams, 1 ounce. And if you already have a large portfolio, you can also add 1 or 2 larger bars. But again, divisibility is important because that gives you the greatest flexibility.
Christian, you already mentioned it. Indeed, when you own precious metals, whether gold or silver, storage is very important. You've already touched on one point, but based on your experience, especially in dealing with clients, what mistakes do you hear about again and again? What are the common mistakes that actually get made?
Well, just thinking about it is already a step in the right direction. And many people then turn to safe deposit boxes, which might be safer than keeping it at home. But a safe deposit box is not really suitable for gold and silver. It's more for securities and savings books, because with a safe deposit box, your valuables are never truly insured. And even if they are, you can't prove how much you had in there if something happens. I'm not even going to start talking about the various reporting obligations. That means the best storage option is in a high security vault. There are several providers of high security vaults where everything is stored with 100% security. Only you have access to it. You designate the authorized persons and can access it from anywhere in the world if necessary.
Christian, thank you very much for your expertise.
Thank you.
Dear viewers, I hope you pay close attention, even though, of course, we already have one or two experts or experienced customers among us, but it's definitely not a bad idea to refresh this information from time to time. If you want to watch the entire video in full length, once again, go to our Goldvorsorge YouTube channel and subscribe to our channel. That way you won't miss any information, news, or especially our explanatory videos. Yes, and now we come to a very exciting and important point. I think most of you have been waiting for this. Now we're moving from the present into the future and turning our gaze forward. How might gold and silver develop further in the coming weeks and months? Which factors will influence the markets now? And who will determine in the coming weeks whether gold or silver will rise again or whether there will be further setbacks? Nicola, you've analyzed the market and you've already talked about how prices developed last month. How do you think gold and silver will develop in the future?
So let's look ahead. The most important factor for the coming months remains the Fed. Of course, we always look at prices in the long term and based on the current market. We expect over the summer, or rather now in the near future, in the coming weeks, another correction. And the driver for this is the strong dollar we currently have. And as long as the Fed doesn't lower interest rates, the dollar will remain strong. And of course, a strong dollar continues to put pressure on the gold price. And my target level here is currently at dollars. This level comes from our long-term upward trend that we've drawn over the years. And that's exactly where the price will go. And for that reason, the price will typically correct a bit again in the next phase. That means down to dollars. You can also clearly see the triangle here. That means now, as I already checked earlier, the price has broken below the triangle, that is below the line. So it's approaching the dollar mark. And of course, it could be a bit higher or a bit lower. But on the other hand, the futures market will also give us more clarity as soon as we see strength there again. That means when investors once again invest in the precious metals market and the euphoria in the stock market is over, as we are seeing now, for example, with the latest stocks where capital is being withdrawn or taken out and flows back into the futures market. This will, of course, also drive up the gold price again. And then in the futures market, we can also clearly see renewed strength here. Of course, it can also happen quickly. The whole world is watching this level, so it could certainly be reached over the summer, or it might even be reached in the coming weeks. But as soon as anything happens in the direction of this zone, you will, of course, immediately get an update from me or from Christian on YouTube. That means you don't have to wait until the next webinar. Instead, we will continue to release regular YouTube videos, especially during a phase like this, when it's very interesting to see how precious metal prices will develop. Specifically referring to the chart, if gold continues to underline the zone of dollars or dollars, is it then likely that it will move toward and eventually settle somewhere around there? Of course, it all depends on the Fed. And the main driver continues to be monetary policy and naturally the Fed's decision over the summer. So what does that mean for you? The euro is also weakening and the dollar is standing strong. The euro is naturally getting weaker because on the other side, the dollar is getting stronger. That means the dollar is currently at 1.13 and is moving further toward 1.10. For you as an investor in the Eurozone, this exchange rate will cushion a large part of the correction. So of course, there's no reason to be nervous. This is a recovery zone that we currently have, where strength is naturally being gathered for the next upward trend. We've seen this time and again in the past as well. I promise you, of course, in our next webinar, again, the next price analyses, and maybe we'll see new all-time highs again. And of course, I hope that we'll be able to announce the next record highs and that you will have bought in exactly during the phase we're in now, so that in the next webinar, we can congratulate you, you can relax and enjoy the whole thing once more. Let's take a closer look at silver. What do we see here? No long-term trend, but also support lines. The former resistance levels are now the lines that everyone around the world is, of course, watching. The target level is currently at $55. Right now, we're at about 56.5 or 57 in that range. That means with a persistently strong dollar. Here too, silver is heading exactly toward this target level, and as I explained earlier, is moving in parallel with gold. And of course, we don't deliberately ignore this because we always look at gold and silver side by side and regularly release videos showing how things are currently developing. Naturally, there's already panic being stirred up about this on the internet. Of course, we don't do that. We talk about the real fundamental data and figures from the actual physical market, not about headlines. And that's exactly why there's no reason to panic, even when we see these prices now. Instead, you can use such a phase to calmly build up your own reserves and, as mentioned, prepare yourself for the next upward trends. After that phase, silver naturally enters a longer period of sideways movement, which is a zone you can clearly see on the chart. And before the next major upward moves come, you have to wait a bit longer to see how things develop. The gold-silver ratio, of course, moves along with it at all times. Currently, you get about 63 ounces of silver for 1 ounce of gold. And if this ratio were to return to its long-term average of around 55, where it usually is, then mathematically, silver would be well above $80. So it's not unrealistic. We actually saw this recently too. Back then, we had a ratio of 45. And at that time, silver quickly shot up to over $100. That means we've seen this recently. Now it's in a correction phase again. But as I said, we'll keep you updated on how things develop, especially regarding the Fed and the US dollar. And since the Football World Cup is happening right now, a little side note that fits perfectly with our topic, of course. They say that this year, there is more at stake at the World Cup than ever before. And that's literally true because the World Cup trophy is made of pure gold, almost 5 kilograms of fine gold. In 1974, its material value was about amount dollars. Today, it's around amount dollars, which means an increase of over 150% in just the last 4 years. No wonder then that everyone puts in so much effort to win exactly this trophy. The beautiful thing is the trophy hasn't done anything except just sit there. That means no trading, no timing, or anything like that. It's simply made of gold. And the same applies to you. That means whoever holds on wins. The message in conclusion is the same message I've had for the entire evening. The reasons why wealth is being shifted into tangible assets worldwide have not diminished because of this correction. On the contrary, the debt spiral, the shifts in wealth, the central bank purchases, all of that remains unchanged. What we are experiencing right now is a phase in which gold is changing hands, from the impatient to the patient. Don't let this unsettle you. Take advantage of it gradually and calmly. And that is, of course, our outlook for the summer, and we will continue to keep you updated.
Thank you, Nicola. So exciting times lie ahead of us. And these setbacks, dear viewers, you should also see as an opportunity, as has just been mentioned, to perhaps invest even more or to get started, depending on where you currently stand. Yes, as I said, many different factors naturally play a role, not just the global economic crisis, but various other influences as well. And as I said, as Nicola rightly pointed out, stay up to date. And you can, of course, do that with our YouTube channel. Every week, we also explain gold investment strategies. Here, you won't miss any current news. Yes, before we get to our big Q&A of the Gold Warsh webinar, let me remind you that every month we have our comprehensive gold and silver update. How did the price develop over the past month? How is it expected to change in the future? The same applies to our international high security storage facilities. Where are the most popular storage locations right now? In which countries is a lot of precious metal currently being stored? Where is it currently being withdrawn? You can find out all this and more every month at our major Gold Warsh webinar. But not only that, as usual, you will of course also get the most valuable input. In addition, as already mentioned in point 3, we also have the headlines of the month. What was reported? Is that even true? Our experts put everything into context for you and analyze the various topics. And of course, we also want to hear your opinion on them. What are your questions? Throughout the entire webinar, you were able to ask our Goldvorsorge experts questions. There have already been plenty of questions asked here. But now we come to our big Goldvorsorge Q&A, where you can once again ask our experts live whatever is truly on your mind, anything you've always wanted to know about precious metals. And I don't want to keep talking for much longer. I'd say let's get started right away because we've received a lot of questions from our viewers at home. So let's dive right in. Here's the very first question from a viewer. I don't understand this. There's war in Iran, oil prices are skyrocketing, so why is the price of gold actually falling? Dear Nicola, maybe you can answer this question for us.
Could you repeat that, please? I didn't quite catch the question.
No problem, I'll ask it again. One of our viewers says, I don't really understand this at the moment. There's war in Iran, even though there's already a peace agreement again. Oil prices are skyrocketing, so why is the price of gold still falling despite the crisis?
Yes, well, you really have to look at the bigger picture here. Everyone needs raw materials on the market. Now, with oil prices skyrocketing, you really have to take another look at the whole situation. Oil has also stabilized here, so it's no longer skyrocketing. Because of all the peace euphoria, even from Trump's side, or the pause, I would say, that Trump also communicated, the oil price has naturally stabilized. That means it has also gone back down. This means you can see here that all commodities are currently somewhat on pause, so to speak. They even went into a kind of summer break earlier. On the other hand, the stock markets have gained in euphoria, and many investors have now taken their money out of oil and invested it into stock portfolios. So basically, it has to be said that, but of course, the most critically important thing to remember is that whenever global oil prices suddenly explode, it is always the hardworking general public who feels the financial burden most acutely when they go to fill up their vehicles at the local pumps or neighborhood gas stations. And this clearly shows just how dramatically the global prices of crude oil and fuel have skyrocketed lately. And naturally, that also inevitably drives the general rate of inflation up to a significant extent. And sooner or later, of course, gold and silver prices will also react, albeit with a bit of a delay. But at the end of the day, when the official data is released, you can see commodity prices jump again, and this is clearly reflected in precious metal prices. That means regardless of what is reported in the media or how other commodities react, we will always need raw materials, just like oil and gold. So at the end of the day, it's just a delay, and here too, gold will clearly gain strength in the future.
Yes, of course, we have more questions from our viewers. So to be honest, does that mean gold doesn't protect you at all in a crisis, or how exactly is that meant? Maybe this question is for you, Christian.
It is the absolute best form of crisis protection. This has proven itself for thousands of years. For the past 5 years, gold has been the protection in times of crisis. But that doesn't mean that you can't see a short-term drop in the gold price, because sometimes liquidity is so tight all around. And just like in the previous question, for example, during a war, the cash flow of big banks and large companies might need to be boosted so they can somehow get by while the conflict continues. So gold is the best protection in a crisis. It's just a question of how you define it and how people look at the gold price in the short term. The gold price shouldn't be seen as speculation. Instead, you should focus on the gold itself, because gold is not available in unlimited quantities. Gold cannot be reproduced indefinitely, and therefore gold has an intrinsic value that cannot be increased. That's why in a crisis it is the best protection, not some kind of paper products.
Thank you, Christian. With that question, let's move right on to the next one, which of course is directly related to the previous questions and also your answer. Can gold continue to fall during a crisis? We can see it very clearly at the moment. Perhaps this question is also for Nicola.
Well, we will always have crises, of course. You can also see that in the level of debt. You can see it in the mountains of debt, etc. And we can see it here as well now. Prices, of course, always correct themselves from time to time, as we can see, and we're seeing that now as well. This also has to do with the futures market on the one hand, as I already mentioned earlier in the webinar. That means the investors, especially the main investors, are always right at the source. And of course, they always set the rules as well. The markets, whether it's the commodities market or the stock market, that means they always react, of course. They are the fastest to respond to whatever is being reported in the media. And in this case, they quickly pull out somewhere. Investors take their capital from a market, and then, of course, they reallocate those funds into an entirely different market sector. And now, for example, it's mainly the specific types of companies that tend to thrive and benefit during these particular economic cycles that are being affected. Then at a later stage, they might decide to pull their investment capital back out once more. And of course, invest it in this company because that's where the profits are. So yes, of course, it is always going to depend heavily upon the current events in the media, on the various things that are currently happening in the world, and what the major institutional investors or market leaders are thinking. Also, the central banks are doing. But in the long term, historically speaking, we've seen this. We also see that no crisis has ever just simply remained unresolved. That means the gold price has always caught up. And at the end of the day, gold has always come out on top. And we can see this now, especially in what countries are doing. Countries are doing nothing other than recognizing that there is a crisis. That means they are increasing their gold reserves. This also means they cannot be sanctioned here. They are independent from all of this. And at the end of the day, they are the clear winners. And of course, they have to do this as well. If you buy physical gold, you don't even have to worry about whether there's a crisis or how high inflation is. You will always be the true winner at the end of the day.
Yes, thank you, Nicola. Now we already have the next question. Very interesting. Gold ETF or physical gold, isn't that the same thing? Maybe, Christian, you can clarify this for us.
Yes, that reminds me of a very, very good comparison, a kind of parable, so to speak. So the first answer, in written words, it's the same. But in detail, of course, it's not the same. Just imagine you want to eat something good, a really juicy steak. And now you go to a restaurant and the waiter brings you the steak, but as a picture on a piece of paper and puts it on your plate. So just a slip of paper. And on it is a photo of a steak. Your neighbor at the table next to you also ordered a steak, and he gets a real one, just a bit bloody, medium rare, served a rare steak. Both are steaks, both even cost the same price. And who will be satisfied by this steak? From the customer's perspective, it's obvious. Only one will be happy from the customer's point of view. But from the restaurant owner's perspective, the slip of paper with the steak is, of course, much more efficient and cheaper. It's more energy saving, and you even save on CO2 emissions. So for a restaurant owner, it's actually a dream to have a steak on a sheet of paper. If he has 100 customers who want to eat steak, just put it in the copier. No stress, everyone gets their printed steak at the same time. If it would work, that is. But of course, it doesn't work like that. And now replace the restaurant owner with the bank, and it's the same principle. It's very clever, it's very efficient, but in the end, it's just a piece of paper.
Yes, thank you, Christian. Now we already have the next question coming up because today we're getting really a lot of questions from our viewers. Are these stable coins or digital dollars the future, or are they more of a danger? Maybe you can answer that for us, Nicola.
Yes, actually, you could say it's both. Digitalization and automation are the future, and that's something we have to accept. Digital means of payment will play an increasingly important role in the future. We all know that. And of course, there's hardly any way around it. But the interesting question isn't whether digitalization or automation is coming, but rather what happens to the control over your money or our money during this process. And the difference is actually quite simple. A gold coin, for example, always works when you have it in your hand. In a power outage, without the internet, without any server having to say yes, no one can remotely disable it, freeze it, or assign it an expiration date. A digital euro, on the other hand, is essentially just an entry in a database managed by someone else, somewhere in a central bank or perhaps even higher up. As long as everything is running smoothly, you naturally don't notice the difference. It only becomes apparent the moment someone else decides what you are allowed to do with your money and what you are not. And this is exactly the point. Digital money can be programmable, fully traceable, and centrally controlled. Of course, this brings real advantages, fast payments, less fraud, and so on. But it also brings new ones, risks. Money that can be controlled can also be controlled against you. And of course, politicians are always coming up with new ideas to benefit from it. And unfortunately, most of it does not serve the citizen, but rather the system. So regarding the question of whether this is the future or rather a danger, well, for one side, of course, this is the future. For the other side, of course, it is a danger.
Thank you, Nicola. Now, here's a somewhat provocative question, or rather a critical question from our viewers, directed at us and our precious metals experts. The question for you, Christian, which is being asked right now, is the stock market bubble really that dangerous? Or are precious metals experts or analysts like us currently exaggerating?
Yes. The veterans among the listeners can probably remember, I think last year in at least 1 or 2 webinars, I covered the whole topic of the financial system in great detail. And that's where we also arrived at the stock market bubble. It's a really good question. And if we briefly summarize it again, with artificial money, we are in the phase of exponential money creation. With artificial money, you can, of course, inflate many systems quite a lot. And this financial system has many components. I'll try to keep it short, but the stock market is just one of these many components. One of the other components is, for example, the savings account system. And this savings account system that was for decades very important. It was essentially abolished by the periods of zero interest rates that we had. And as a result, the money naturally flowed primarily into the stock market. That further inflated the stock market. And so it goes from one segment of the financial system to the next because insurance policies, which used to be very attractive, are no longer so. And that market has also slumped, and a lot of money is flowing into the stock market there as well, into it. Now, of course, you also have to take into account that real estate hasn't been affected yet. They'll probably be next soon enough. But there are other sectors as well, like the bond market, which used to be enormous. That has also slumped, and everything there has also flowed into the stock market, creating a bubble. And my dear crypto friends, they really don't like to hear what I'm about to say. But when the crypto market crashes and crashes even further, that too will flow into this stock market bubble. So this stock market bubble is being artificially inflated. Let's just not repeat that word anymore. And sooner or later, the bigger it gets, the more it will have to correct itself. At the latest, when no new money comes in, when there are no more stimulus programs, and when there are also people who have taken out loans to inflate the stock market. But with rising interest rates, that will come to an end once again. And the more dramatic this bubble will be when it bursts. And it's dangerous that it will burst at some point. But of course, we're not there yet. When the artificially created money is eventually abolished and cleaned up, then there will be a normal economic development again. But as I said, we're not there yet. But we're certainly not exaggerating here. One could go on about this for a long time, about the various areas of this financial system that are no longer functioning. And the stock market, in part, has already become an entire marketing campaign and is soaking up the money. But the stock market is now, well, the most important market. And yes, so we are definitely not exaggerating. On the contrary, the warning is out there. This is not scaremongering. It won't happen tomorrow or the day after, but it will, how should I put it? There will be a reform, if you want to look at it that way. And so far, it's not that dramatic. It will go on like this for a long time because, as I said, and Nicola has already mentioned it a few times, I believe, we are in the most beautiful phase of unlimited money creation, and everyone still wants to take advantage of that for as long as possible. But the warning should be taken seriously, very seriously.
Thank you, Christian. And we have a follow-up question from one of my viewers. Can I actually inherit gold and silver without any problems?
Yes, of course. It's easy to inherit, and you could even leave it to me, but the recipient, of course, has to make sure that everything is done correctly from a tax perspective. And there are experts for that, a specialist. For tax questions, you should consult someone so that everything is done properly. And with our storage systems, of course, we also have the option to properly record the authorizations. And it's already somewhat pre-structured. So you already know, let's say, who will be entitled to it and when. And speaking of which, since we're on the topic, in the course of all these storage issues, I also have many clients who tell me that they've inherited a property and what a hassle and commotion that is. So gold and silver are the alternatives that make everyone happy. And they don't require much work. They're easy to pass on as inheritance and stress-free.
Thank you, Christian. And we'll move right on to the next question, which is directed at Nicola. Are these price targets, especially $10,000, so $20,000 for the gold price, really realistic? Or is that just YouTube talk at the moment? You know, the headlines, the videos from the past weeks and months.
So essentially, yes. Of course, the crucial factor is the time frame. That's not defined here, of course. On YouTube, as you correctly said, such a number is often just a marketing strategy at first so that people will watch the video. But you have to understand where it even comes from. And when someone talks about $10,000 or $20,000 per ounce, they usually don't mean that money suddenly becomes magically more valuable or that it happens overnight. Rather, they see how much paper currencies have already been devalued and how high gold would have to be if it were to play a bigger role again in the monetary system. So on the other hand, as we've heard several times today, the money printing machine keeps running at full speed. And that means even more paper is being printed. And of course, that means inflation will continue to rise here as well, and purchasing power will be lost. That means you can afford less with the same amount of money. And here, of course, is the point. Global debt amounts to hundreds of trillions of dollars. Christian already mentioned it in the webinar. The USA is at about 39. And at the same time, physical gold is, of course, also limited to some extent. And if even a small portion of the trust in bonds, currencies, or stocks shifts into gold, that can, of course, trigger enormous price movements. Of course, that doesn't mean that gold will be at $20,000 tomorrow, but it does show that gold is strategically extremely important in an over-indebted system, especially as a limited resource. That means don't bet on fantasy targets, but rather start building wealth now, because I believe in $10,000. Therefore, I would also strongly recommend that you take advantage of this now, buy physical gold and store it securely. The same goes for silver. Silver always moves in parallel. And of course, the most important thing is to keep it outside the banking system. In this regard, Christian is the right contact for optimal storage. But of course, it always depends on the timing.
Thank you, Nicola. And right away, a follow-up question that one of our viewers just asked. What does dollarization actually mean for us in Austria? After all, we pay with euros.
Well, the point is, even though your bank statement shows euros, a lot depends on what is paid daily, meaning what is paid in the background. In the background, it's usually a dollar transaction, of course. That means, for example, when you fill up your car, you pay in euros, but the oil price behind it is set worldwide in dollars. The same applies to heating, to many raw materials, also to international loans, and here, for example, also to commodities. So that means we trade just as much in dollars as we do in euros, of course. But of course, the dollar has been the world's leading currency for decades, and it's the language in which the world does its calculations. And that's exactly what is now starting to change dramatically. This is what's called de-dollarization. And de-dollarization simply means that more and more countries want to free themselves from this dependency. That means they trade increasingly in their own currencies, hold fewer dollars as reserves, and instead buy gold. By now, gold has even surpassed euro reserves in most countries. This means it's only a matter of time before the gold reserves of individual countries also surpass their dollar reserves. And in my opinion, it's just a matter of time here. And that will happen at some point. But if the currency on which half of the world system depends, if that currency on which half the world system depends starts to lose trust, of course, that doesn't come without consequences, not even for us here in Austria. And of course, this doesn't happen overnight. That's always very important to remember, but rather step by step. But it is happening, and that's very important, and that's the crucial point. That means de-dollarization is certainly not just a buzzword somewhere on the sidelines. In the long run, it affects every one of you and, of course, your purchasing power, and it is definitely progressing. You could almost say week by week.
Yes, thank you, Nicola. Now, we've just received a really exciting question. What actually happens to gold and silver if artificial intelligence really does replace millions of jobs? For example, Christian.
The money flows to the wealthy. The money is there. It just moves from many people with less wealth to the few with a lot of wealth, and they just keep buying. Gold and silver, overall, nothing really changes. So in the end, it has no impact.
Now we have a second question right away, since it's also very relevant at the moment. Why is silver actually so much cheaper than gold? We can see it right now as well. Shouldn't it be much higher by now? In fact, silver has just experienced a bit of a setback.
Yes, I hear an echo from all those panic-mongering channels out there on the internet where they conjure up an explosion in silver prices just so everyone will obediently follow their channels. But welcome to the right channel here with us at Goldversorge. We also rely on facts. And the fact is, despite all the scarcity, and a lot of silver is consumed every year by industry because it's present in small amounts in many products, and recycling it isn't so easy to do. But despite all that, silver is, of course, still being mined sufficiently as a byproduct, not as the main thing, but as a secondary product, so to speak. Otherwise, the price would already be somewhere else entirely. And despite all these doomsayers, there is still enough of it. Silver, and in the end, the market determines the price. Maybe there's a bit of manipulation, that's possible, but it is consumed and continues to be mined. And of course, silver is ultimately also a substitute for money in some way, and it will become scarce again at some point. But if I just consider the question, when I think about it, the price is where it is ultimately because of the market. So I really do believe that the paper market also has an influence on it, but you have to keep things in perspective. And silver is simply cheaper than gold. That will even out a bit at some point. And there's this gold-silver ratio, which many people are familiar with. It used to be 1:10. Then at some point it was 1:50. 1:10, of course, was many hundreds of years ago. But then for a long time it was 1:80. You can easily calculate that for yourself. It always fluctuates, it adjusts more and balances out again. But it will definitely remain cheaper than gold.
Yes, Christian, a follow-up question right away, although I think I could answer it myself, but maybe it's also a question from a new customer. Gold or real estate? Which is the better long-term security?
Well, to be clear, I'm not actually talking about your own personal home that you might eventually like to acquire for yourself. That property, of course, is your own roof over your head, that's clear. But aside from that, if you look at it purely as an investment, we are living in a time where we have fiat currencies that can essentially be increased without limit. And there are credit systems. And in that sense, you can buy real estate on credit and more and more and more. But at some point, however, this will collapse. So it's a question of the timeline, how long this will last. Right now, it's the best time because the expansion of money is just happening so easily. as we've already mentioned a few times today. But at some point, interest rates will shoot up after all. We've already seen a few signs of that as well. And that's where I would recommend that you're better off with gold and silver.
Yes, today we also have many entrepreneurs among our viewers, and we've already received a question. I am an entrepreneur. Should I hold gold in the company or privately?
That question is directed at me as well, I assume.
Please go ahead and answer it, Christian.
Yes, so the situation is this. I am assuming that you, dear entrepreneur, are subject to tax in Germany or Austria, because that's something we would also need to clarify a bit further. There are experts for this, but in Germany and Austria, as a private customer, you are naturally preferred. You are in a better position, so I would always recommend doing it privately. You have the holding period. After 1 year, gold and also silver, profits from the sale of gold and silver are completely tax-free. And that's why it's much better than buying it through a company, because then, depending on the tax system and so on, you would of course have to pay taxes on it as a company, up to 50%, depending on the case. And you don't want to just give your money away. Unless you're that generous, then you can do it that way too. So my recommendation is always to do it privately.
Now, we actually have a bit of a recurring question that always seems to come up for us, no matter what the specific topic happens to be. Why is it that you always consistently emphasize this particular narrative of existing entirely outside of the traditional banking system? Isn't that a bit exaggerated? Maybe this question is for Nicola.
Well, I would say it's not really about bad-mouthing banks. Of course, banks fulfill important functions in everyday life. That's just part of it. But there is a reason you need to understand, and it's actually quite simple. Having a bank deposit is, legally speaking, a claim, just like a loan. But physical gold in your own name, on the other hand, is real ownership. And that's the huge difference, even if hardly anyone is aware of it in everyday life. Basically, there are two worlds. On one side, there's the world of paper money. That's the world of banks. On the other side, there's the world of physical commodities. That's where we come into play. And here's the crucial point. Politics, of course, uses the banking system as its instrument. Almost everything that has historically gone wrong has arisen precisely from this paper system, which was created in the banks. That is the world of the system, and that's the real fundamental problem. There's a reason people say you don't bury your gold in enemy territory. That's exactly why we recommend always staying in the safe zone and storing your assets there, not where the risk lies. Because this system, sooner or later, will inevitably have to be resolved somewhere sooner or later. And in this process of resolution, inevitably only a few banks will survive. And those that remain, of course, will probably only survive because they've been nationalized. And I really wouldn't recommend anyone to have their security precisely in this area. So anyone who keeps all their wealth in the banking system may have the right system in the right world, but they don't actually have any real assets in their hands. And that's exactly what it's about, real assets. Assets that truly belong to you and are therefore independent of banks outside the system. And that's exactly what's important.
Thank you, Nicola. Now, we've also received a bit of a historical question from a viewer, but it's definitely quite interesting. And maybe a lot of people have already wondered about this as well. Why is the Roman Empire constantly being mentioned? What does that have to do with our money today?
Hello, yes, here I am. So dear Max, I've definitely taken note of your question. Yes.
Dear Christian, maybe this question is for you.
I've already heard it, yes, but I'd still like to briefly add something to what Nicola said regarding his statement about the banking system and things outside the banking system. You also have to maybe look at it the other way around, that the banking system often likes to speak badly about everything that is outside of the banking system. Because of course, the financial system and the banking system is most of it, wants the money to stay in the paper system and not flow outward into something else, into a commodity. And there are topics like the gold ban, which is always being brought up, or that gold doesn't yield any interest, no interest at all, and so on. That's exactly the jab from the other side as well. it is very important that we educate our customers about why it is important to be outside the banking system. And it's absolutely not an exaggeration. On the contrary, it happens far too rarely. So I just wanted to jump in and add that to the previous question. And regarding the Roman Empire now, if I think about it a bit, I'm already very old, but the Roman Empire, well, I personally can't remember it anymore. But I do know that it lasted a very long time, the Roman Empire. I believe it was from around 500 BC to at least 500 AD. You can narrow it down further, imperial times and so on. And what is it about the Roman Empire that is repeatedly compared to the present day? That's quite clear. Many have already heard about it. It's the so-called phrase bread and circuses, with which the population is basically kept calm by giving them enough bread. That would eventually be something like a basic income, or for that matter, all the social systems that exist nowadays. And the games, well, we all know exactly which games those are. There are always games being held. Right now, for example, it's the World Cup or similar events. So bread and circuses can be interpreted a bit more broadly. War is also a kind of game, at least in this metaphor, or other health games, for example, and so on. The point is that the population is distracted and doesn't rise up against those in power. I think from this perspective, you can best answer the question, because why? I'm not sure. Maybe the person asking has spent a lot of time studying the Roman Empire and perceives it more subjectively. Another topic comes to mind: financial systems, which also have an expiration date. There were already such systems in the Roman Empire. Several financial systems came and went, but I think the gladiator games, those are the most important things that people always associate with the Roman Empire.
Yes, thank you, Christian. Now we have another question, which has actually already been addressed several times today, but of course we're happy to answer it again. What is the biggest mistake investors can make with gold? Maybe we'll ask Nicola about this.
Christian has already explained all these topics very well in the webinar and also in a YouTube video. Feel free to check it out again on YouTube, but the biggest mistake is simply not owning any gold at all. And many people talk about it for years, many dream about it, many wait for the perfect moment. In my opinion, it's exactly this waiting that is the mistake. You have to do it, even if you start small. Because whoever takes the first step has already arrived in the right world, and everything else naturally builds on that. And the second big mistake is treating gold like a stock. Many people buy and check the price every day. If it goes up, they're happy. If it goes down, they get annoyed. And some even sell again at exactly those moments. And that is exactly the wrong approach. Because gold is not a speculation. For the next week's profit, it's a safeguard in the long term, so from a long-term perspective. And the daily price is, of course, secondary in this context. And especially in recent years, this has become quite clear. Today, prices have become more favorable again. And those who calmly continue to buy during such phases are gradually building their secure foundation piece by piece. And that, of course, is the point. Those who buy regularly and approach the whole thing calmly can look to the future coolly and confidently because they are guaranteed to be on the safest side.
Thank you very much, Nicola. Now, of course, we also have our evergreen questions, especially from our new viewers. If I want to start today, what would be the simplest first step? Maybe, Christian, what can you recommend to our viewers?
Yes, well, the first step has basically already been taken, the most important one, which is actually doing something, not just talking about it. But then, in my opinion, the first and best big step is simply to set up a free high security storage account, either in the web shop in person or by contacting us directly. It's very simple. Just set up the high security storage account and then you can get started. That's the most important first step.
I think that's a good step. You just said that as well. The first good step was that people even joined our webinar today. Just a quick reminder, of course, we offer this as well every month for you. We are taking a short summer break now, but starting in September, we'll be back monthly. Of course, we'll be here for you. And here we have another interesting question about our main topic today, about the Fed, from a viewer. I, and perhaps other viewers here in the chat, feel uncertain after central bank decisions like those of the Fed. Is the current pullback in the gold price more of a warning signal, or could it actually be a buying opportunity in the long run? Christian, you've already answered this, at least in part. Maybe you could briefly elaborate on that again.
Yes, I've heard this question or something similar in another context as well. I've also heard it quite often from clients. In fact, it's like this. Maybe the comparison is a bit off, but let's say you want to buy a red sports car, a Ferrari, and it's always very, very expensive. Well, and suddenly for a while it becomes cheaper. So when are you going to buy it? When the price goes down or when it goes back up? So what I'm trying to say is, yes, exactly. Gold has existed for thousands of years. You don't need to explain anymore that gold is valuable. It wasn't invented in 2008 by some secret service or by some Satoshi like cryptocurrencies or Bitcoin, but it's been valuable for 5,000 or 6,000 years already. The fact that gold has value is something I no longer need to explain. It's simply a fact. And if this value happens to be a bit cheaper to buy at the moment, then that's a special offer. In fact, it's a special offer with advance notice. And so it's not a warning signal, but rather, as Nicola already explained to us today, where these long-term lines are, maybe wait a little or maybe not, because something can always happen at any time. Buy regularly. These are good prices right now. These are also entry prices again. Maybe panic will set in again soon. Then maybe there will be a bit more downward movement. Then even more people will jump in, because when it comes to gold, we no longer need to prove that gold has value. The ancient Egyptians already knew that, and even those before them. This is truly the knowledge of humanity. So please don't be afraid, but see it in a positive light. These are the times when you buy again.
Thank you, dear Christian. These are exciting topics once again, of course, and also information that we hopefully can pass on to you, dear viewers. Don't miss out on such webinars from Goldvorsorge anymore. And with that, I'm already looking to the future, to September, because that's when we'll have our next webinar. And that's especially exciting because then everything will once again revolve around the power of the BRICS states. Gold as a shield. Here, of course, we'll be talking about the various economic and political dynamics that are currently emerging in the world. And these, of course, also have a major impact on the precious metals market and ultimately on the price. So go ahead and register now for the next Goldvorsorge webinar on the 28th of September. Many exciting topics all about gold and especially about the BRICS states. So sign up right away so you don't miss anything, and to make sure you don't miss any developments in the precious metals market over the summer, I can only recommend our YouTube channel to you. Subscribe to our channel here so you don't miss the weekly Goldvorsorge Explained videos. Here you'll find everything about gold and silver and everything related to them. Yes, as I said, make sure to join us again for the next webinar. Of course, we have the most important information for you. On the one hand, how will the price of gold and silver develop further, and how has it developed over the past few months? And then, of course, the big topic that is especially important to us, the major high security vaults worldwide, what's happening there, what are the current trends, and in which countries is the most precious metal being stored. In addition, we naturally want to provide you with our Q&As. What are the current manufacturers doing? What is especially popular? Which products can we recommend to you? And what is currently included as well? All this and much more at our next webinar on the 28th of September. Register right away with Goldvorsorge so you don't miss anything. We look forward to seeing you. With that, I can just say thank you very much, dear Christian, and also thank you, dear Nicola, for your expertise today on so many exciting topics.
Thank you. See you next time. Have a great summer.
And of course, I also hope that you at home, dear viewers, were once again able to gain important, take away valuable information, everything about gold, precious metals, and of course, all the background details. It's all here at our Goldvorsorge webinar. Always fresh and excellently prepared. So join in, it's worth it. Sign up again for our next webinar. I can only repeat that on the 28th of September. With that, I would like to thank you for watching and listening. With that, I wish you a pleasant evening and see you next time.
So goodbye. Thank you. Thank you.